Shutdown concerns, credit concerns, banking concerns. Not today, says this market. Futures are pointed higher. 30 minutes until the start of trading. I'm Vonnie Quinn. Matt Miller is off. Danny Berger is on assignment. Bloomberg Open Interest starts right now. Coming up, Amazon's cloud service is now recovering, that's in quotes, after a widespread outage affected clients such as Zoom, Robinhood, Coinbase and more. And earnings season ramps up with Tesla, Netflix and Intel among almost 90 companies reporting results this week. Plus, a new round of US-China trade talks this week as President Trump lists rare earths, fentanyl and soybeans as top US priorities. All right, let's get to some stocks to watch. Apple is definitely on our radar today because the iPhone 17 series outsold the iPhone 16 range by 14% over their respective first 10 days on sale, not just in the US, but also in China. This is according to Counterpoint Research. And keeping an eye on Apple shares, but also Amazon shares today after that news. The tech giant saying its cloud service has recovered after a disruption degraded operations for customers, including government agencies and financial platforms. In the pre-market, that stock was lower. We are up about 0.4% in what is an up market, it looks like, according to futures. So let's get more details now on what could be a troubling development. Joining us is Bloomberg Tech co-host Ed Ludlow in San Francisco. So AWS, Ed, accounts for 30% of cloud business. This could have been very serious, no? What do we know? Give us the details.
So the problem originates from one of Amazon or AWS's oldest legacy data centers, North Virginia on the East Coast, US East 1. And you're absolutely right that AWS accounts for a third of the internet, put it that way in cloud computing context, but this specific data center is the backbone. They have something called DynamoDB, which you can think of as a large filing cabinet or database. So if you are an app or platform or website that relies on AWS, it's likely your data is in that DynamoDB database. They basically had a traffic jam. DNS errors, which meant that even if the database was running, those platforms couldn't communicate with it. And so the stock's modestly higher, right, 0.4%. But the way to look at it is that this happened between, say, 2 or 3 a.m. Eastern time, midnight here on the West Coast. And lots of technology companies will be waking up to the ramifications of it, which is delays, other sort of slow performance issues while it still gets resolved. But the general outage is over. That's right.
And from what I understand, Ed, and maybe you know more about this, this was not any kind of an attack, although it does leave the opening now for attackers if they wish to try to use this opportunity, right?
Yeah, there's certainly some vulnerability, and it's a black eye for AWS, put it that way. We're talking about the Amazon stock being up 0.4%. The market is calm, but the way to look at it is AWS is the majority of operating income. So reputationally for Amazon, it's notable. The very simple explanation on a DNS error is that the DNS converts things that you and I could read, website addresses, into IP addresses. And that's why the point about DynamoDB is important. Even if the database with all of these platforms' data was up and running, those companies for a short period of time had no way to communicate with them, which means retrieving data is very difficult. That is the basis of the internet, retrieving data and putting it in another place. So operationally, it had big ramifications globally. For example, in the UK, HMRC was impacted. Some trading-based platforms like Robinhood, Coinbase have been impacted. That impacts people's abilities to transact. That now seems to be over.
Surely Amazon will say more throughout the day. Our thanks to you, the always wonderful Bloomberg Tech co-host, Ed Ludlow. On the earnings front, Tesla kicks off this quarter for the Magnificent Seven on Wednesday. We'll also get results from Netflix, Ford, GM and more. Bloomberg Markets correspondent Nora Melinda is here now with a preview. So what are the main themes investors will be looking for as automakers in particular, and also Intel reports?
Almost 90 companies reporting this week, but of course in focus, as you're mentioning, are automakers this week. We're looking at GM, we're looking at Tesla, we're also got Ford coming up as well, and they're all expected to report record EV sales for the month of September here, but really what is on the mind of investors in terms of main themes is rare earth materials. Of course, there's been that conversation going back and forth between President Trump and China, just what the relationship is like there. So that's really going to be what a lot of investors are looking for out of these reports, in addition to tariffs, of course. Those are the two main themes that I would say that a lot of Wall Street has their eyes on as it pertains to these automakers here.
Yeah, it's fascinating, right? I mean, investors are going to be wanting answers when executives don't even have the answers themselves. They're probably looking for contingency plans just to offer up to investors. What about Netflix, Nora? Because we have had some developments on that front, and also it pertains to the U.S. consumer. Everybody's going to be watching.
Well, it should be a good experience here, a good quarter here for Netflix as we're taking an eye and a look deeper into what the metrics are right now. But right now, it seems as though there should be potentially a better than expected margin gains coming out for this quarter. We're seeing people who are seeing a lot of viewership and uptick in the U.S. in particular here. So it seems as though it should be a relatively strong quarter for Netflix. If you look at the stock, it's up about 34% year to date. So it seems as though Wall Street expects more gains to come after this report.
What are you binging on Netflix at the moment?
Lots to keep an eye on, honestly. What is there? There's this one little cartoon. I can't even remember the name of it right now. But there are a lot of shows to keep an eye on.
Too many. Thank goodness. The holidays are coming up next month. Bloomberg's Nora Melinda, thank you so much. Turning to Washington, trade talks between the U.S. and China will resume later this week in Malaysia. President Trump listing his top demands in the negotiations.
One of the things I want is China's going to buy soybeans. I want China to stop with the fentanyl. Very, normal things. I don't want them to play the rare earth game with us.
Bloomberg Washington correspondent Tyler Kendall joins us now from the nation's capital. So, Tyler, to listen to President Trump there, you wouldn't have imagined anything unusual went on last week, and yet it did. Can China look past all the mudslinging and engage in regular discussions this week?
Well, Lonnie, that seems to be the question, but we have gotten some positive indications. Take, for example, last week on the sidelines of the IMF meetings here in Washington, people familiar tell us that the Chinese delegation actually worked to tamp down some concerns of global partners over their newly unveiled curbs when it comes to critical and rare earth minerals, saying that the intention here was not to disrupt any normal trade flows. As of now, it does appear that these tracks are on talk. We know the Treasury Secretary Scott Bessent met with his trade counterpart virtually on Friday and then confirmed that they will meet face-to-face this week in Malaysia. And both sides really are re-engaging because they're up against this rather firm and key deadline. That's November 10th for the broader trade truce. And we heard what felt like a softening in President Trump's rhetoric, saying that ultimately there is still this threat of that 100% levy on the table, but that he doesn't think rates that high are ultimately sustainable. Both sides have mounting pressure here, but I'll put one main one on your radar. None of those topics that we heard President Trump outline are considered to be unusual. We knew that these were going to be the topics on the table, but soybeans in particular are going to keep coming up, Vonnie, because we are starting to hear from U.S. farmers that they are running out of storage for this excess in supply since China has not imported any U.S. soybeans so far this season. Just for quick context here, China imported $12.6 billion worth of U.S. soybeans last year alone.
Yeah, and for more context, Tyler, soybean futures rising for a third consecutive session in Chicago today on speculation that this meeting will, get some renewed agricultural trade between the two countries. That said, will a soybean deal be enough, or does she have to give something on rare earths in order to avoid 100% plus tariffs?
Right. So as President Trump outlined, rare earths really have been at the center of these discussions. But we're going to have to see where it goes from here, because we know China in particular is looking for the U.S. to loosen some of its own curbs that it's put on advanced semiconductor chips. As one example, we also know that China is upset at these new fees that are being put on Chinese ships that are docked at American ports. So it's going to be a negotiation that continues to evolve here, and something that we're going to have to watch really closely. Our analysts point to fentanyl, that third topic that President Trump mentioned as perhaps the lowest hanging fruit here. We know that there has been at least some progress when it comes to fentanyl. 20% of the tariffs that are currently in place on China are imposed over this concern. But really, it does seem to be coming back to those agricultural purchases. Vonnie, I can tell you that a senior administration official tells me that the White House is currently looking at other export markets where U.S. soybeans can go, also other uses for U.S. soybeans as a sort of safety net in case these talks do not yield the sort of results that U.S. farmers are looking for.
Tyler, thank you so much. That is Bloomberg's Tyler Kendall. And let's get a check now on futures and markets more broadly, because we are seeing futures pointed higher. A lot of relief in this equity market this morning, but I do want to point to treasuries. The 10-year yield was firmly above 4% once again today, but now it is below 3.99. So the 10-year yield is lower as treasuries get a bid. No doubt shutdown being in day 20 is not helping this market. The VIX also came down, but it's still above 20. And I want to point to gold as well, because we're seeing gold announced at 43.21. So it's definitely off its record, but we're not flat today. We're still 1.6% higher on gold. Bitcoin has woken up too. It is just below 111,000 a coin, and so rising from its lows of the weekend. Let's get a look now at some other movers on our radar. Cleveland-Cliffs shares jumping on a recovery in demand for steel made in the US due to tariffs. Some rare earth and critical mineral stocks are climbing this after William Blair analyst Neil Dingman initiated the companies at outperform. And crypto-linked stocks, of course, are rising alongside Bitcoin and gold today. Just mentioning Strategy, Robinhood, Coinbase, all higher Mara holdings as well. Coming up, Apple nearing a record high following an upgrade from Loop Capital. We'll discuss the growing optimism around iPhone demand next. This is Bloomberg Open Interest. Now to high interest, to look at what's making headlines around the world. The Louvre was shut yesterday after a gang pulled off a lightning-fast jewelry heist, cutting through windows with angle grinders and all sorts of power tools and stealing 8 priceless pieces, including tiaras and necklaces once worn by French royalty. One item, a diamond and emerald crown worn by Empress Eugénie, was recovered as police hunted the thieves. Kering is selling its beauty division, including House of Creed, to L'Oreal for $4.7 billion, scrapping plans to build out its own cosmetics arm. The two will co-develop a perfume for Gucci, Bottega Veneta and Balenciaga. The tie-up with L'Oreal is the first big move under CEO Luca de Meo, who took over last month. Kering is confronting a slump in Chinese demand and the threat of higher US tariffs. Carlyle CEO Harvey Schwartz says market volatility is on his, quote, worry list, but he sees no signs of real deterioration just yet. He spoke with Bloomberg's Danny Berger at the Formula One Grand Prix in Austin over the weekend.
That data suggests that companies are growing, employment is steady, inflation's a little sticky, but there's nothing in the immediate horizon that suggests that, as you would say, things are crumbling. Having said that, late cycle, it should be on a worry list.
Turning to tech now, Apple shares are on track to open near record levels today. This helped by Loop Capital upgrading the stock to buy from hold, citing positive iPhone demand trends. Joining us now is Ryan Vlastelica, Bloomberg Equities reporter. So Ryan, we did get this information that the first 10 days of sales were particularly good for the iPhone 17, not just in the US, but in China. Give us more details.
Yeah, good morning. Thank you for having me. So it seems like after a period of time where people were very kind of underwhelmed by the pace of iPhone 17 sales, especially relative to expectations for a real super cycle, it does seem like people are becoming more optimistic. Even though they don't have the kind of AI features that were touted last year, it does seem like consumers are buying the new iPhone. Maybe this just reflects how long people have been holding on to their previous version, but it does seem like there are stronger than expected sales. And like you said, that did lead Loop Capital to upgrade the stock to buy this morning.
Now, why all of a sudden are customers thinking about upgrading, even some that haven't since the pandemic, when next year we'll get a flip phone and it seems like next year is maybe the bigger upgrade cycle potentially?
Well, I know earlier this year there was some speculation that people were buying to get ahead of the tariff. So there could be some of that. There could just be the fact that people really have been going longer and longer without upgrading. Maybe people just feel like the latest iPhones, even though it is seen as mostly having some incremental improvements to battery, camera life, memory, things like that, this is enough for them to sort of upgrade, especially if there are concerns about tariffs. Yeah, I'd say that's sort of the main takeaway.
Well, we also know that, we're waiting for the Apple Intelligence rollout in China in particular, but it doesn't seem to have deterred those shoppers in China.
Right. I think a lot of the Apple Intelligence features will still be available. It might just take a software update or an OS upgrade. in order to get them, but it doesn't seem like you will be barred from using them even if you upgrade right now. So I'm not sure that that is too much of a limitation for people.
You know, this was very serious for Apple. It needed this iPhone 17 to work and to sell, right? It's half of its revenue, the iPhone. It has to keep coming up with better and better refreshes for this iPhone. Can it continue to do that, Ryan?
Well, that is really the key question here. Apple's sales growth or revenue growth has been a lot slower than what we've seen at the other mega cap companies. People are really hoping to see some kind of big upgrade cycle. That's why there was so much optimism surrounding Apple Intelligence when it was first announced. Obviously, that didn't really play out as people expected. There were a lot of delays. Some programs were canceled or paused. We are still waiting for them to have a more pronounced shadow in the industry of AI. But in the meantime, it does seem like people continue to buy. They're upgrading more. Positive signals, at least for the near term.
All right, Ryan, thank you so much. That is Bloomberg's Ryan Vlastelica. A check on futures now, just about 30 minutes before the opening bell. We see S&P futures pointed to a gain of about 0.5%. NASDAQ futures up 0.6%. And I do want to point out that we had a very nice up week last week in spite of everything. We had the NASDAQ 100 up 2.5%. Plus, this is a big earnings week. Not as big as next week, but we have nearly 90 companies reporting this week. So there's a lot of enthusiasm this Monday. Coming up, Morgan Stanley's Andrew Slimmon says this bull market is here to stay if it manages to reach a fourth year. This is Bloomberg Open Interest. Bad news, good news for companies reporting earnings since Trump's Liberation Day on April 2nd. Torsten Slok of Apollo sent this chart to clients, writing, quote, stock prices of companies with negative earnings have in recent months outperformed stock prices of companies with positive earnings. Let's bring in Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. So, Andrew, I know you're bullish, but you have to answer me this. Is it concerning when growth stocks and companies without earnings are far outperforming those with earnings for this long of a period? Sure, there's always going to be a few, but has it gone overboard?
I feel like you teed me up. It's my number one worry. My number one worry is that the signs of late cycle in a bull market is when speculation really heats up. And you see in that chart, non-profitable technology stocks, it has been the best thing to invest in since the low. Low quality, money-losing companies, and that is never a good sign of health for the market. There's certainly reason to be optimistic, but that is a sign of late cycle.
Okay, but at the same time, you are waiting to see what happens with this bull market because you think it can continue.
Well, I mean, just the data suggests if you get to the fourth year of a bull market, which means you don't have a bear market decline of over 20%, which we haven't. We've had 7 of those since the S&P started, and in all 4 years, the market has been up. We've never had a down year. And you look, I can flip around and give you the positive, compelling arguments. The Fed is turning increasingly friendly. Don't fight the Fed is rule 1 of the handbook. Number 2 is you have fiscal policy. You have tax release coming early next year. So you have fiscal policy turning friendly. And I'm amazed at sentiment after 3 years of a very strong market. Sentiment, which follows price, is not higher. So it lines up that the fourth year could be positive again. But as we started the segment, what worries me is the speculative stocks seem to be leading the charge.
Well, it's funny because you just used this unusual monetary fiscal mix to make maybe the positive case, but Paul Tudor Jones the other week literally said, look, it's so unusual that it's really, really scary. So can everything coexist, Andrew? Your concerns about, companies with negative earnings alongside your, happiness, maybe perhaps with this easier policy. How does it all coexist without something going wrong somewhere?
Well, something will go wrong. The question is when, and I think those having both sides, fiscal and monetary, I think it will cause the heating of the market just to ratchet up, and we could get closer to the end of the bull market. but you're going to see these money-losing stocks just continue to charge forward. And that's what's really happened. Every time they take a step backwards, which I think is good news, they come roaring back. So it's not the Mag 7, it's not AI, it's the more speculative stocks. That's what is attracting investors' attention. And if you have this liquidity coming, I think that's where the money's going to go.
If investors must be pulled in, as you suggest, Andrew, what do you do with the money that you're pulling in? Do you leave it on the sidelines and wait for another opportunity? Or do you just shift it into things like defense and other types of tech, for example?
Well, I think you're coming up to earnings season, and I think earnings season is going to remind people, hey, don't forget about these, the very large cap tech stocks. They're generating a lot of cash flow. They're doing very well. So I think the fundamental backdrop is very good for lots of industries. We saw the banks largely report very good numbers. So, I wouldn't ignore most of the industries. I think it creates an opportunity to find the industries where they're performing well. And, as a portfolio manager, I just don't hear a lot of weakness. A lot of companies haven't told me things aren't great. So I think earnings season is going to be good, and that's a good opportunity to find areas.
All right, we are going to continue this conversation.
It doesn't have to be in these super speculative stocks.
No, it does not. All right, we'll ask you whereabouts in a moment. Andrew Slimmon is staying with me through the opening bell. And just to check on futures as we approach that opening bell now, well, we're in the green once again. We had our up days and down days last week, but we finished in the green for really all the major indices, including the KBW Bank Index, for example, which came roaring back. So all those credit jitters seem to be put to the side for now. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Bonnie Quinn, stepping in for Matt Miller and Danny Berger. So let's take a look at where we're about to flip over from futures to actual live trading. We are pointed higher. It looks like it might start off a positive Monday, at least, with S&P, NASDAQ and Russell 2000 futures trying to put last week behind us. We'll even get some data this week, some CPI data from the government. So ringing the bell at the NASDAQ, YD Bio, but look at the NYSE because we have the winner of a young scientist competition from California, in fact, Kevin Tang, ringing with 3M. It was their young scientist competition, and apparently he developed something that helps detect falls for older people. So that young man having a bright career ahead of him. All right, let's look at some stocks to watch. Apple getting upgraded to a buy at Loop on positive iPhone demand trends. First 10 days were up 14% over last year in the US and in China, according to Counterpoint Research. Apple's iPhone 17 series outstripping then the 16. So that stock up 2.1%. It should be noted, though, that it is an up session. Amazon, though, it had a problem this morning. Web Services said its cloud service had recovered after a disruption degraded operations for customers. Everyone from government agencies to financial trading platforms. That stock recovering from being lower in the pre-market, though, and up about 0.4%. All right, still with us, Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. So, Andrew, 90 companies or so reporting this week, another 175 next week. You said this is the quarter where it's time to pick, time to get out of your winners maybe and pick some new winners. Where should we be looking?
Well, actually, the winners haven't really done that well lately. The market seems to be fixated on the more speculative stocks and has left a lot of companies behind. I think so. The setup going into earnings is quite good. In that I always get nervous as a portfolio manager if I have stocks that are red hot going into earnings season because then the chances are they don't beat the number and they go down. But that's not the case this time. So I think the opportunity set is great. Whether it's large cap tech, these stocks have kind of lagged. I think that's intriguing. The big banks have reported, but a lot of the wealth management asset managers haven't reported yet. I think they're going to have good quarters. Industrials. As well. And, look, I think one of the risks, the only risk that I see is that the AI trade is capturing more than just tech and utilities, other areas, and just be wary that the correlation of the AI trade is spreading out beyond just tech. And that might be good, but make sure you understand that you have correlated AI plays.
Yeah, it's a good point. And how much longer can we see these deal announcements? Also, what about CapEx plans? I mean, do companies need to beat and raise those now as well every quarter? Or at some point, will investors be happier if companies say, look, we have our CapEx plans in place, they're not changing for now?
That is a tough question, and I don't know the answer to it. What I do know is that this is not like the late 90s where we're laying dark fiber with the hope that the demand would come. Every time I turn around, listen to anyone who's knowledgeable about the industry, they say the demand is there for these data centers. They full up as soon as they build them. So we haven't seen a slowdown in demand. Until you see that, I don't think CapEx expectations are going to come down, and that's all very, very bullish for the industry. Look, yeah, ultimately it will get inflated too much. But one of the things that does give me comfort, Vonnie, is, AI is a cost savings tool. It enhances productivity. I couldn't figure out how to fix my treadmill yesterday. And who do I go to? An AI chatbot. So, it's replacing people, sadly, but that's going to help profitability. And I think CEOs are better. Let's face it, it's harder to grow revenue than cut costs. And this is a cost cutting. So I'm in the belief that we're still in the early stages of the AI enhancements.
Yeah. You mentioned financials a few minutes ago. Are they oversold, Andrew? Because sure, we had an up week last week in spite of everything, but year to date, I mean, the BKX might be up 13% or so, but the broader ETF, that mirrors all of the companies in the S&P 500, financial companies, that's down 2% year to date.
Well, I mean, it's a very fair question. I mean, the issue is, were they two isolated credit cases yesterday, or is this, as Jamie Dimon said, is cockroaches? That's tough, and I think you have to be very cautious because you just don't know. And to step in and buy, whether it's the regional banks or the alternatives that have been hit, they might be great trades. I think, for me, that's just too much risk because we just don't know the answer. Will it be? Will it grow to other companies or not? So I stick with the big banks that have reported great numbers, or some of the areas in financials that are less exposed.
So you have more risk appetite for some of these tech companies than you do for the regional financials. That's really fascinating. What about gold, Andrew? Alexander Altman from Barclays last week telling Surveillance that it was actually, if anything was in a bubble, it was gold that was in a bubble. Can you comment on gold at almost records?
Yeah, I mean, I would say Vonnie, I go around and speak at these conferences, and the questions I've been getting for the last decade was, well, when is the dollar going to lose its reserve status? And I used to say to people, what, are people going to sell dollars to buy the euro, or they're going to sell dollars to buy the Chinese yuan? I just don't see that happening. And the mistake I made was, I think other central banks are selling dollars and buying gold. I never thought gold would, take the mantle. So is it a bubble? Yeah, but if foreign central banks are reducing their treasury holdings and buying gold, then I think it can continue.
Andrew, how much are you going to be watching the actual official data that we get later in the week, CPI data, for signs about the consumer? Are you concerned at all about the U.S. consumer?
I'm not, because I think it is, the risk is only this period of time until these tax refunds start coming early next year. So maybe it's a slowdown, but I doubt it, because payroll, you got to remember, yes, payroll growth is not growing, but that doesn't surprise me because we're in a new wave of technology. And if you look back to late 90s, Vonnie, there were plenty of negative payroll prints when when the internet was rolled out. That's not that unusual. But the consumer has a job. Maybe there's not a lot of job growth, but the unemployment is not growing. So I think it's going to be a good Christmas, and then we're going to roll into next year and these tax refunds going back to our original conversation. I'm more worried about the speculative bubble growing than some bad economic news.
All right, Andrew, thank you so much. We'll have you to guide us through it if anything of that import happens. Anyway, that is Morgan Stanley's Andrew Slimmon. Let's get a check on the stock market right now because we started positive and we'll see if we continue to, but we certainly have 452 stocks higher and less than 50 stocks lower as we kick off a week that actually has earnings, that actually has data, and even Tesla earnings. We're going to hear from the car maker, the EV maker, a little bit later in the week. So the Mag 7 earnings will be kicked off. And then you have Apple, of course, the best performer, about to overtake Microsoft as a second most valuable company. Amazon recovering, but this is a broad tech rally. As you can see here, we had Andrew Slimmon give us the reasons why. And clearly, the market is in agreement once again today. Let's take a look at the broader macro picture, too, because for the moment, it looks like the tone is set. As you can see, all of the major sub-indices, except for the Consumer Staples Index, and that really is trying to go negative. It's basically flat. Energy is powering us higher, utilities, industrials, materials, everything you can think of, from defensive to growth companies to financials, are roaring back today. So we'll see if it holds throughout the session and what it portends for the rest of the week. So coming up, Tesla investors looking for details about demand for its new models. We'll be looking at that story, plus risks from its rare earth supply chain from China and how it's all going to meld together into earnings season. This is Bloomberg Open Interest. Let's get a check on some stocks now with our top calls. Some of the analyst action in focus this morning. And first up, Daren Restaurants. It's getting an upgrade to a buy at Goldman Sachs. The firm says Daren is gaining share thanks to its smaller exposure to lower income consumers and strong value positioning at Olive Garden and Longhorn. Next up, Marvell Technologies is getting cut at Barclays. The firm says Marvell's custom chip business just isn't shaping up as strongly as hoped, and it also sees Broadcom's gains in the custom chip industry as a longer-term threat. Finally, Apple is getting upgraded to a buy at Loop Capital. The firm is also raising its price target to a street high now of $315. The analyst says Apple is entering a, quote, long-anticipated adoption cycle that could drive iPhone growth through 2027, fueled by refresh demand and new design momentum. Joining me now to continue discussing this, Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. And in San Francisco, we have Ed Ludlow, Bloomberg Tech co-host. Mandeep, I want to ask you first about the refresh cycle, because apparently some people that hadn't refreshed since the pandemic decided now was the time, and not next year when we're getting all these exciting flip phones from Apple and all sorts of other things.
Yeah, I mean, typically, people tend to keep their iPhones for 4 to 5 years, some even longer. So it doesn't surprise me that you are getting that sort of bump, now that they have launched a new version of the iPhone. I don't think it's going to be a big refresh cycle as everyone is anticipating, with AI, and there will be that big moment when Apple will have a much bigger anticipated refresh cycle. But that being said, there's a lot for them to do on the large language model front, and that's where I feel they still have to show that, the device is a lot better than the regular upgrades where you have a better chip and a better battery. Yeah,
I'm sure Apple wants to get to the point, Ed Ludlow, where everyone is upgrading every year, right? That would be the ideal, but they're not. And in China, there isn't even Apple Intelligence out yet, but still, they got Chinese consumers to buy.
Yeah, it's why the calendar matters. So when we had the big splashy event in Cupertino at Apple Park, you first look at to what date does the new generation of handset go on sale, where does it go on sale, and will those units be counted in the quarter? Mandeep is completely right. Of course he is. This is Mandeep Singh of Bloomberg Intelligence. But, cycles are greater than a quarter. You don't get a lot of visibility into what happens in a 3-month period. The one thing we will get more on, because Apple has communicated about it, is the impact of tariffs and supply chain, right? Because all Apple and any other of the Mag 7 names can do is tell us in that moment that they reported their earnings for the period, the information they had available to them, this is the charge or hit they do or don't see from tariffs. And so that will be a factor irrespective of whether they sold handsets just here in America or elsewhere.
Will tariffs negatively impact Apple to a substantial degree, Mandeep?
It will, and the other big risk is there may be a pull forward going on since first quarter. I mean, we didn't see it in 2Q results. I'm expecting, it will get reflected in 3Q or probably will impact their fourth quarter guide because everyone is expecting tariffs to raise the prices for the iPhone. So imagine if you're a consumer, you're saying, I should better buy it now. And so to my mind, there is a pull forward element in Apple's holiday quarter, and that's where everyone will be focused.
For sure, and we saw that with EVs as well because of policy. I want to ask you about something that happened this morning. When I came in, AWS was experiencing problems from its customers getting all sorts of notifications that apps were down, even its own Alexa and so on. What happened, and is it something we should be really worried about?
I mean, outages in general are not that big of a deal. We have outages with YouTube, and anytime you have apps this popular, like AWS is hosting pretty much a lot of the popular apps, so outages can happen. My worry is more, it has to do with the AI code that is being written now for a lot of these systems. They keep calling out 35–40% is AI code. Was it one of the reasons for the outage? Because that puts doubts in minds of people. Okay, is AI, yes, it's helping you boost productivity, but is it incorporating bugs that could result in outages? So that I'm curious about.
Okay, that's terrifying, and I hadn't actually thought of that. Ed Ludlow, are you hearing anything about those kinds of concerns? I mean,
no. Again, like just hearing that it's a DNS error. In other words, the database that was found to have glitch or an issue couldn't communicate with the outside world. So all the apps and platforms that rely on DynamoDB had issues with IP address conversion. That's quite technical, but that's the stated reason that they're giving, and it's back online. But to Mandeep's point, I mean, one of the companies whose CEOs was up overnight posting on social media was Perplexity's CEO. So, when you have outages to services like that, it speaks to Mandeep's concern.
Yeah, and I just want to mention that Robinhood is commenting on the service impacts in a post on X right now, saying services were impacted due to issues at AWS. And it's obviously not the only company, far, far, far from it. Let's move to Tesla, though, Ed, because we do get earnings this week, and that stock has had quite the volatile ride. Is all the bad news priced in, or could we hear more bad news in earnings?
In many ways, it's a really simple story. In the quarter they're about to report, Tesla delivered almost 500,000 vehicles, the best ever quarter on record. But we know that was largely because of the end of a federal tax credit in the United States. So consumers ran out and bought EVs before it was too late. The story longer term with Tesla is one about AI and robotics. We know that. And on November the 6th, shareholders will have their annual meeting where they'll vote on this Musk pay package. You would not expect that to directly come up during the course of Tesla's earnings and the earnings call. However, Tesla is one of the companies that allows retail shareholders to propose questions for the call and then vote them up. And so in that sense, it will be interesting to see if Tesla honors that commitment of taking questions through say.com and whether Musk and other executives are forced to answer the question about the pending vote on Elon Musk's compensation, but also XAI and the non-binding proposal that Tesla make an investment into XAI, which is kind of more analogous to that long-term story.
Yeah, so much to learn from this quarter's call. We also have Netflix reporting October 21st, which is tomorrow. Ed, what can we hear from Netflix? They've been on a tear.
Yeah, Netflix has said for a really long time, judge us by classic Wall Street top and bottom line financial metrics. And so they have around 300 million subscribers. They have a goal by the end of decade to get beyond 400 million. But the thing that they want to argue that they're showing, and this is a stock that's up 36%, 37% year to date, it rose 80% last year, is revenue growth and bottom line expansion because of all of the content wins that they've had. They've managed to do streaming in a much more profitable way. That's how they want to be judged. But in the limited previews we have of this name, that's also where Wall Street seems to be focusing its attention. But as always, like I'm watching Black Rabbit right now, Vonnie. I don't know what you got going on Netflix, but the content pipeline and their strategy for live events, for example, and sports is really important.
For sure. I'm catching up on The Punisher, so I'm really far behind, but I'm still enjoying myself. Mandeep, I want to ask you about Intel because we've had a lot of news out of Intel and pertaining to Intel in the last quarter. What can they say on earnings season, given that all of this is just new and really they can't have changed too much?
I mean, right now, everyone on the AI side is so excited about this ramp up of compute and, consumption when it comes to generative AI. It feels like the traditional cloud server demand is also going to benefit from generative AI. And that's where Intel comes in because of their x86 architecture. So any news on that front would be a positive. And also on the fab side, I mean, we know the government is trying to push companies to use Intel fabs here onshore. So any news related to that will be a positive. So two catalysts, one on the traditional cloud infrastructure and the second one on the fab side.
Yeah, Ed, you talk to analysts constantly. What are they asking in terms of the government stake and what it means for this company and investors in this company going forward?
Yeah, Intel's ability to move faster by association. At the center of this administration's AI policy is cutting red tape. Otherwise, it's not, an issue of where they get capital from. I don't think Pat Gelsinger and now Lip Bhutan had any issue on where they'd get capital from. What they have in common is they wanted to shore up the balance sheet. But with Intel, yeah, they need some I mean, it's always the same story. Mandeep's probably nodding or rolling his eyes. I'm not sure which one. Intel just needs to go on television or on an earnings call and be like, here is a customer that we actually have for our lead edge process. And until they do that, there's always going to be some skepticism around the foundry part of their business where they don't have the products to compete on the AI accelerator or GPU side against NVIDIA, AMD, etc.
I mean, can they do that, Mandeep? The stock, and it wouldn't be hard to be up 90% from where this stock was at, but it's up 90% really in the last month.
And look at AMD. I mean, they've become a formidable, number two when it comes to GPU side. To my mind, Intel has to really kind of strike those alliances that AMD ended up doing, when it comes to OpenAI. So something like that with a large LLM provider would be, I think, exciting for investors.
All right. Mandeep, you promised to come back if it turns out that the large language models went amok because of the AWS problems this morning. Thanks to both of you. That is Bloomberg Tech's Ed Ludlow and Mandeep Singh of Bloomberg Intelligence. Well, it's not just Tesla. Ford and GM also reporting earnings this week. Do turn into Bloomberg Surveillance tomorrow morning for an interview with the CFO of General Motors. That's Paul Jacobson. Tomorrow morning, 7:30 a.m. This is Bloomberg Open Interest. This is Bloomberg Open Interest. To check on stocks now, about 25 minutes into the trading session. It is a Monday trading session. We do get data later this week. And you can see we're off to a positive note. Risk on firmly once again today. Most stocks in the S&P 500 are higher. The index itself up by 0.75% after jumping more than 1.6% last week. The Nasdaq up 1% as well. The VIX coming down ever so slowly. It was above 20 for most of the morning. And the Russell up 1.7%. Gold is a little flat. It's below its record. But the question is, after the Diwali season, are we still going to see demand for gold or has it reached its peak? Let's just look at some of the stocks that are moving. Cleveland-Cliffs is a fascinating one because it came out with earnings. It missed on many metrics, but of course the steel tariffs helped. But now it's saying it's going to start exploring for rare earths. So very timely for Cleveland-Cliffs. That stock was up much more than that in the pre-market, but up 16.5% ain't bad for a post-earnings session. Bitcoin has woken up as well, and you've got Robinhood Markets, Coinbase, and all of the Bitcoin-related stocks higher. In fact, this even after Robinhood was affected by the AWS outage. Earlier this morning, Robinhood said it did affect users, but obviously that stock is higher. And Apple, of course, up almost 3% after we discovered the iPhone 17 sold 14% more in its first 10 days than the iPhone 16. Coming up next hour, Manulife, John Hancock's Emily Roland. Plus, we talk cybersecurity with the Okta CEO. This is Bloomberg Open Interest. We're 30 minutes into the trading session. Welcome to Bloomberg Open Interest. I'm Bonnie Quinn. Matt Miller is off and Danny Berger is on assignment. And we are risk on once again today. Might be day 20 of a government shutdown. We might have all sorts of problems lurking, but it is earnings week. 90 companies almost reporting earnings this week, including one of the Mag 7. And certainly that's being reflected in today's trade. A bounce back from last week once again, and a VIX that is below 20. Coming up, earnings season ramping up, as I was saying, with Tesla, Netflix and Intel among almost 90 of them reporting. And a new round of US-China trade talks as President Trump lists rare earths, fentanyl and soybeans as top US priorities. Plus, investors are looking ahead to an inflation report delayed by the government shutdown. That data dropping, fingers crossed, on Friday. We begin with stocks kicking off the week on a positive note. I caught up with Andrew Slimmon of Morgan Stanley earlier on his outlook.
My number one worry is that the signs of late cycle in a bull market is when speculation really heats up. Non-profitable technology stocks, it has been the best thing to invest in since the low. Low quality, money-losing companies, and that is never a good sign of health for the market. There's certainly reason to be optimistic, but that is a sign of late cycle.
Let's continue the conversation now with Emily Roland, Manulife Hancock Chief Investment Strategist. Emily, that's not a man that worries about too much, and yet he is worried about the quality, perhaps, of this rally, or at least some of the companies that are getting very much rewarded in this bull market. Are you concerned, and if so, about what?
We are. Bonnie, that was a great interview. I listened to it earlier. And Andrew pointed out one of the things we're watching every morning when we wake up. It's unprofitable stocks, meme stocks, crypto-related assets. Again, you're just seeing a sort of junk rally playing out as momentum and sentiment has really been the name of the game here. It's a key reason that we're allocating to higher quality stocks. We're fully invested, but we are drafting off the market right now. We don't want to be that lead race car. We want to be right behind, not chasing beta here, but still owning these high quality stocks that are producing earnings. The earnings engine in the United States is still on. So while we want to watch those more speculative corners of the market, we do want to be invested, and again, following the trends in those high quality pockets of the market.
So how do you do that, Emily, then, with avoiding as much downside as possible? I mean, do you go for the names like NVIDIA and so on still? Do you look at particular ETFs, particular sub-indices of tech?
Yeah, so we are overweight technology. It is one of the highest quality parts of the market. And the way that we measure that is by looking at things like return on equity. We're seeing tech, communication services rank the highest there. But we also want to be mindful of not overpaying for earnings growth. So we look at things like the PEG ratio, the PE divided by earnings growth estimates. It basically tells you how much you're paying for future earnings growth. Areas like consumer discretionary do not rank well on that PEG ratio, so we're not overweight there, but we're seeing more attractive opportunities in areas like communication services, technology, even industrials and utilities, all of which have been really a play on AI, whether it's through power demand, whether it's through earnings. We're even seeing the gains in technology stocks helping financials. There's a symbiotic relationship there where, because tech earnings are helping power the economy, that in turn is, and the markets, that in turn is creating opportunities for financials, particularly on the wealth management side. So really that circular relationship there really helping fuel positive results across various sectors.
You know, Emily, is there a danger that the more we talk about this, the more investors become skittish and it's a self-fulfilling prophecy that some kind of a liquidity event or something is created? I know that you say that what has always stopped momentum markets, at least in the last 25 years, is some kind of liquidity event from leverage. Yeah, I mean, we can't obviously foresee it, but where are you looking?
Yeah, that's the biggest challenge, Vonnie, and that's the number one question that we get from our clients right now. What can stop this bull market? And it's usually some over-levered player that gets uncovered in the face of higher rates. And, we saw a few rumblings of that through some regional banks that had some issues last week. It seems to be idiosyncratic at this point. So we don't know where that next liquidity event is coming from. It is probably more in these more speculative corners of the market, which is a key reason that we're embracing high quality areas. We're also looking at bonds as a really attractive opportunity there. There is still income in bonds, but it could go away quickly if there were some type of concern that something more nefarious was going on with the economy. So we want to think about locking in those yields. We've been talking about income in bonds for years. The 10-year treasury now hovering right around 4%, the 2-year breaking below 350. We want to think about engaging in that income before it vanishes over the next 6 to 12 months.
Yeah, I mean, where are we on the economy, Emily? Because, it seems like we've stopped talking about any potential recession, or that we might be even coming out of a recession. We just don't know it yet, or there could be a rolling recession through the economy. I mean, that would be very concerning to have markets at these kinds of highs and think that there might be a recession ongoing.
Yeah, the economy's not great. When we think about it, that Facebook relationship status button, it's complicated. That's the way that we look at the US economy right now. And just the data last week, we're all over the place. We saw the Empire Manufacturing Index beat at the same time where the Philly Fed Index fell. We look at things like the Fed's Beige Book, which was giving us mixed messages. The NFIB survey fell. We have to look right now at real time or alternative sources of jobs data. We're looking at things like Indeed and Link Up as sources right now. Those are showing that job openings are falling. We're hearing from businesses that their hiring plans are slowing. So we're really getting a mixed message there. What we do know, though, back to income, is that we do have a steeper curve now, and there's an opportunity for roll down. And that's a key reason. Given this complicated backdrop for the economy, we want to think about leaning into that income that's available.
Emily, we're into day 20 of a government shutdown. This market doesn't seem to care. I mean, I guess it's not really affecting the economy, right? Anything that is delayed will, hopefully come back to those who deserve it. And as for layoffs, we're not hearing about more and more and more layoffs as time goes on. So, and also it's not a debt ceiling issue, right? So is there anything to be concerned about with this government shutdown?
Bonnie, the only thing that could be a little bit different this time is that there are actual layoffs going on. In prior periods of government shutdowns, like you mentioned, all those wages were restored. We are seeing government layoffs happening, though, in the backdrop. So, and that is against a labor market that has already been softening. So we're watching the jobs market, at least the data that we can get really closely here. We've seen negative jobs, in recent months. That is usually only happens during recessions. It's very unusual to see a negative jobs print outside of a recession. The only time that ever happened was 1996. So we want to be mindful of any further cracks forming in the labor market in light of this government shutdown. That may mean that the Fed may need to cut even more aggressively. They are probably underestimating, in our view, some of the weakness in the labor market right now. So that's really the key difference in our minds.
As Ian Lingen of BMO last week said, "Dear data, we miss you. Please come back." Continuing the relationship status topic there. Emily, thank you so much. That's Emily Roland of Manulife John Hancock. So let's get a check on these markets as we see risk on Monday. We have the S&P 500 up 0.8%, the Nasdaq 100 extending its gain there to 1.1%. And we have that 10-year yield back below 4%. So perhaps just a little bit of a divergence once more there. We have gold up as well, 1.6%, though it's off its record. And Bitcoin has woken up as well. But I think it is very telling to see what those stocks are doing on this Monday. It may not take much to move this market. But let's get a look at some single stocks moving at this hour. Shares of Apple rising after an upgrade from Loop Capital on positive iPhone demand trends. Counterpoint Research also released a report finding that the iPhone 17 is outselling the previous model in both the US and China, at least in its first 10 days. That stock up 2.6%. Amazon is higher as well, though it was lower in the pre-market. It said its cloud service has now recovered after a disruption today impacted a wide range of customers. And then Cleveland Cliffs, a fascinating story today. It's exploring its sites for, get this, rare earth materials. This as the US steelmaker looks to expand its presence in metal production. It reported results that did well but did miss on some metrics. We'll discuss all of this later in the hour with Bloomberg intelligence analyst Richard Burke. Coming up, President Trump names his demands ahead of trade talks with China this week. We get the latest from Washington next. This is Bloomberg Open Interest. Now to high interest to look at what's making headlines around the world. BNP Paribas is under pressure after a US jury ordered it to pay $21 million for aiding Sudan's brutal regime in the 1990s and 2000s. The verdict could open the door to billions more in claims from 23,000 plaintiffs. BNP vowed to appeal, calling the ruling flawed and saying it was specific to 3 individual cases only. Goldman Sachs veteran Michael Marsh is leaving after nearly 2 decades. The 49-year-old, who leads capital solutions for Europe, the Middle East and Africa, will retire with no immediate successor named. His exit follows other senior departures as Goldman reshapes its private markets business under a newly formed capital solutions group. The Finnish smart ring maker Oura is trying to move into blood pressure monitoring. The company is launching a new study this year with the goal of spotting early signs of hypertension. The announcement comes just a month after Apple released a similar hypertension detecting system for the Apple Watch. Well, turning to Washington, trade talks between the US and China will resume later this week in Malaysia. President Trump listing his top demands in the negotiations.
One of the things I want is China's going to buy soybeans. I want China to stop with the fentanyl. Very, normal things. I don't want them to play the rare earth game with us.
For more on the trade talks, we're joined now by Bloomberg Washington correspondent Tyler Kendall. So the president speaking as if there were no words exchanged between the parties last week in any fashion other than friendly, Tyler. I mean, is that the way these talks will kick off later in the week, or does the blood remain?
Well, Vani, that's really the needle that the White House is trying to thread here, right? That there has to be this balance. And while the White House maintains that that threat of a 100% additional levy on Chinese goods could go into effect on November 1st, you also hear President Trump saying in an interview over the weekend that rates that high are unsustainable. But really what we've seen in recent weeks upended what was considered to be a rather months-long stability, tentative stability at least, in the U.S.-China trade relationship. And it appears that we are getting back on track. We heard some positive comments out of China over the weekend after Treasury Secretary Scott Bessent met with his counterpart virtually on Friday, and then the pair are expected to meet face-to-face in Malaysia later this week. That will, of course, set the groundwork for any sort of tangible deliverables that we could expect when President Trump and Chinese President Xi Jinping have their face-to-face meeting. Now, all along, we have been expecting that these negotiations would take place because if you look at the timeline that's been outlined by both sides, there seems to be room for negotiation here, right? November 1st is the date for those potential additional 100% tariffs, but it's the same timeline as the enforcement dates that China has unveiled for its newly unveiled export curbs on critical and rare earth minerals. But Vani, of course, in the background of all of this is that the White House has to keep up the pressure here because pressure is mounting here at home. You heard President Trump mention soybeans. We know that American farmers are sounding the alarm that they're starting to run out of storage space when it comes to their supplies since China has not imported any U.S. soybeans this season. And one other dynamic I'll just add to your radar really quickly here is that farmers are also waiting on economic assistance. But the Trump administration says that that is on hold at the moment while these trade talks play out, but also because of the government shutdown that's currently in place here in Washington.
Yeah, I'm reminded of a note I saw last week, and I can't find who authored it right now, but it was titled brilliantly, She Loves Me Not, right? And it's very nuanced because if she gives in on something like soybeans, that doesn't really help the United States on rare earths, and yet the United States would then not be able to potentially leverage this, massive tariff that is really the only stick that the United States has to use, Tyler. So what happens if we get something on soybeans and not on rare earths?
Well, it's definitely a complicated dynamic. And of course, China really does have a grip when it comes to the global supply chain related to rare earths, accounted for more than 70% of global supply last year alone. Now, the U.S. does have a few other cards it can play, particularly when it comes to their own export controls related to advanced semiconductors. Also, these newly imposed fees when it comes to Chinese ships that are docked at American ports. So we'll have to see how this continues and how it continues to ramp up. Actually, you mentioned one piece that you enjoyed. I had pulled from our own economists here at Bloomberg Economics that pointed out a really key piece of leverage that China also holds that I found super interesting. China maintains the ability to disrupt other U.S. economic engines. Look at some of these companies like Apple that are trying to shift its production out of mainland China. China actually has the ability that they could potentially stall that by restricting cooperation from some key Chinese contractors that remain essential to that process when it comes to shifting supply chains. So this really could escalate and go from here, much to your point. But at the same time, it does appear that both sides want to at least tamp down the rhetoric for now.
And Tyler, if I can ask you about the government shutdown day 20, we were just speaking with Emily Roland of John Hancock Manulife talking about, layoffs. Do they continue in DC? What is the situation at the moment?
Right. Well, President Trump did say in an interview over the weekend that the layoffs are going to continue. We know that 4,100 federal employees have so far received those termination letters. But there is a court case that is throwing the legality of these firings essentially into question here. So we're going to have to wait how that plays out. We're also watching really closely, of course, pay for federal workers. I'll put on your radar that this week we are expecting a bill to go to the Senate floor that would essentially authorize and appropriate funding for those workers deemed essential, such as the military, for example, to keep getting their paychecks. Because, Vonnie, we've really seen in recent days some of those pressure points being taken off the table, such as we got funding for at least the first paycheck for members of the military. We also saw supplementary funding for a key federal nutrition assistance program for women and children. So the next big looming date here appears to be November 1st when open enrollment begins. So we're expecting conversations to maybe ramp up ahead of that, though Republicans really do maintain that they're not going to discuss any of those health care provisions related to the expiring premium Affordable Care Act subsidies until the government reopens. Vonnie, we did hear from the Senate Majority Leader John Thune, who is promising what's known as an up and down vote on extending those ACA tax credits for 1 year. But again, the red line seems to be the government needs to reopen before those conversations can happen.
Well, it is already the third longest shutdown ever. Bloomberg's Tyler Kendall, thank you so much. Still ahead, Cleveland Cliffs soars as it expands its search, it says, for rare earth materials. More on the steelmaker next. This is Bloomberg Open Interest. One stock we are watching is Cleveland Cliffs. The stock soaring after announcing it entered into a memorandum of understanding with a, quote, major global steel producer. It also announced it's searching sites for rare earth materials. Joining me on set now is Richard Burke, Bloomberg Intelligence Senior Analyst for Basic Materials. Richard, I had to smile. Cleveland Cliffs saying two of its sites, one in Michigan and another in Minnesota, show, quote, key indicators of rare earth mineralization. Who knew that these states were so rich? Is there rare earths in Minnesota?
Well, I'm not surprised there would be, because if you look at rare earths, it's kind of a misnomer. They're pretty predominant in the Earth's crust. The thing is, are they in big enough quantities to make it economically viable to extract profitably? And you've seen, Ramaco Resources announced that they found rare earths in their coal mines. We've seen various lithium producers finding that they found rare earths along with lithium. So the fact that Cleveland Cliffs, which has been in iron ore mining for probably almost a century, has found rare earths in its iron ore mines is not really that surprising.
Okay. Now, can you use the same equipment to mine for rare earths? And, how much of each individual rare earth do you need for it to be viable to produce something else?
Well, it's a lot different process. Rare earths are kind of, you extract the rock, and then you have to use chemicals to target very specific rare earths to, get them out of the rock. The other thing that's a little different is a lot of times where rare earth resides, also radioactive material resides. So you have much more environmental concerns than you would have with just iron ore mining.
That is fascinating. Now, on the steel portion of things, they didn't quite meet metrics that analysts were putting out there, but they did, do well in revenue and so on. They had the benefit of the steel tariffs, though. I mean, is everything going Cleveland-Cliffs' way now?
Right. I mean, they definitely, if you look at companies that are definitely would be a beneficiary of Section 232 tariffs and some of the tariffs, Cleveland-Cliffs probably is at the top of the list. So in fact, all steel makers are. They've been able to, Cleveland-Cliffs not only benefiting from the tariffs, it's also benefiting from the U.S. auto sector starting to reshore production back to the U.S. And also we've seen other industries reshoring. In fact, the MOU that you mentioned in the intro to this segment was with the global steel manufacturer that wants to support its customers that are moving from elsewhere in the world to the U.S., so they want to team with Cleveland-Cliffs to supply steel in the U.S.
Such a fascinating story. Richard, thank you so much. That stock up more than 16% today. That is Richard Burke of Bloomberg Intelligence. And once again, let me point out that Cleveland-Cliffs saying that if the sites are able to produce rare earths, that would, quote, align Cleveland-Cliffs with a broader national strategy for critical material independence. You have to wonder what Cleveland-Cliffs is hoping for here. Let's get a check on the markets. Nearly 1 hour into the trade, we're up 0.9% on the S&P 500. The Nasdaq is powering ahead, up more than 1.1% to add to last week's 2.5% gain, by the way. And we have that 10-year yield still, though, below 4%. Coming up, this morning's AWS outage heightening the need for cybersecurity. Perhaps Todd McKinnon of Okta joins next. AWS says services are back up and running. This morning's outage underscoring, though, the need for cybersecurity. Well, enter Okta as one player. The company says its business has grown alongside the acceleration of cloud services. It now says it's on the lookout for rising AI-enabled threats. Joining me now is Todd McKinnon, Okta CEO. Look, anyone can have an outage, but if you're providing cloud services for 30% of, corporate America and beyond, it's a little concerning. What went through your head when you saw this morning, Todd?
Well, I think about the world as layered into different critical services. Cloud infrastructure is one critical service. And as the leading independent neutral identity company, we're building this identity service for the entire world, whether that's enterprises, whether that's consumers, whether that's people building AI agents. We want to be that identity infrastructure. It's important for cybersecurity, it's important for business continuity, and it has to be reliable.
So how do you make sure that it's reliable then?
A lot of redundancy and a lot of focus and a lot of making sure we do exactly what customers expect, whether it's backups, redundancy, and monitoring it continuously. It's very important for us.
Now, you are growing very, very substantially. You have 800 people in San Francisco, and how many thousand around the world?
6,000 global employees doing a great job for our customers every day.
Well, love to hear it, and I hope they are. How fast are you adding customers, and what's your pitch versus another identity security company?
Yeah, it's an interesting perspective we have, and there's different perspectives on. Some vendors want to sell you everything across the entire application and platform stack. Some vendors want to sell you everything across cybersecurity. We focus on identity, and we focus on verifying who the people are in your company, who the people are coming to your website as customers or prospects. And now, really, with AI agents, we make sure that that identity service is continuous across everything you're trying to automate in your business with AI, too. And that's our focus. And beyond that, we focus on connecting to everything else in the technology stack and letting our customers choose what they want to use.
What is the scale of AI agents Okta expects in the next 12 months?
It's starting out very strong, but it's going to be growing significantly. When you think about what companies can automate with these AI agents, how they can improve their top-line revenue, how they can cut costs, how they can be more efficient, how they can serve their customers better, it's got tremendous potential.
What about your exposure to ChatGPT user growth? How much of that do you have, and how is it changing how you do business?
Well, I think ChatGPT is the perfect example of how much can be automated with AI. And when every company looks at that, they think, hey, we can make our customer experience better with adding ChatGPT-like capabilities. We can make our employees more productive. So it's really driving them to deploy deploy more AI technology, and that means more identity is required. Those connections have to be secure. Those connections have to be reliable. So it's really an exciting time for the industry.
Is it still in the land grab phase? And if that's the case, which I think it is,
yeah.
then how do you make sure that you're the one doing the grabbing?
Well, I think it's really important that everyone understands how important identity management is to rolling out AI and AI agents.
I mean, they only need one person to manage their identity, right?
Yeah. Well, it's important that the identity service connects to everything. It connects to every application in the back end, every development platform. One of the things about AI agents particularly is how you build these things is changing very rapidly. So we give our customers the ability to make sure they have security, governance, and visibility, and then let them choose the rapidly evolving platforms behind the scenes to whatever fits their needs. That's really core to everything we do, that choice and that flexibility.
What did the Google Wiz Palo Alto CyberArk deal mean for you?
Well, it's a different worldview. I think companies try to consolidate around everything in cyber. We think that that's not the right approach. We think the right approach is to consolidate on identity because it preserves the choice of other cyber tools for customers. They're not locked into one endpoint tool or one network security tool. They can choose whatever is best for their business and will keep them more secure, especially as the threat environment is rapidly evolving. The ability to choose the best cyber tool and not be locked into a stack from one monolithic vendor is very powerful, and it's resonating with our customers. They cut costs and standardize their identity workflows and use cases around Okta, and then choose everything else around the rest of cyber to best fit their needs.
All right. Well, thank you so much for coming in today, Todd. That is Todd McKinnon, CEO of Okta. Let's get a check on markets now. It is risk on Monday with the indices up a percentage point or so more in the case of the Nasdaq 100. Most stocks in the S&P 500, in fact, are higher right now, just a few lower. A little bit of a tentative bid into treasuries, perhaps. Government shutdown day 20 and still some lingering trepidation out there. That has the 10-year yield below 4%. And just to take a look at Apple, it is up 2.9%. Apparently, iPhone 17 sales are running 14% ahead of last year's iPhone 16 sales in the first 10 days, not just in the US, but also in China. Coming up, Carlyle is partnering with Oracle Red Bull Racing. We'll bring you our interview with Carlyle Group's CEO and Oracle Red Bull Racing's team principal next. This is Bloomberg Open Interest. Carlyle has become Oracle Red Bull Racing's exclusive investment management partner. It's the first partnership between a Formula One team and a major global private markets firm. Carlyle's CEO, Harvey Schwartz, and the team principal of Oracle Red Bull Racing spoke with Bloomberg's Danny Berger following that particular announcement.
Everything about Oracle Red Bull Racing is about performance, execution, excellence. So that part was very easy to see and very easy to relate to as a firm. The sport, F1, is also global and growing dramatically, as we know, as are private markets. And so that all aligned. What made this really special was when Laurent and I spent time together, the team spent time together, and there was almost like this sort of very, uniquely natural affinity where we all just became best friends really quickly. And so, hey, it's got to be fun, too. But it is about performance excellence, first and foremost.
I was going to say, Laurent, given what Harvey is saying, that the finance world in general has been more interested in sport, more interested in F1. Have you been fielding a lot of calls before this partnership from Harvey's peers who wanted to get in like he did?
You know, in reality, no. It felt very natural straight away with Carlyle, with Harvey. It's this moment where you realize that the person you are talking with are the best at what they do in the world. And we feel we are quite good at what we do. And what we see with our partners is that we go and try to partner with companies that are the best at what they do. And we had a lot more points of connections. We had these performance obsessions. We have this data-driven approach in our very different business. But together with that quest for perfection in everything we are doing, it felt like a very, very natural connection.
To be fair, Harvey, there have been some outspoken critics about the move for private capital to do sponsorships, to get invested in sports. Josh Easterly of Sixth Street said at a conference a couple weeks ago, it's representative to him that firms are more concentrated on fine-tuning their brand than on the returns themselves. What do you say to that criticism?
Our business is exactly the way Laurent just described it. It's first and foremost always about performance. Performance drives everything. If you have performance, you have success. Again, you think about everything they do at Oracle, Red Bull Racing, it's all oriented around success. When he references data, we think about data. It's different data, but these are organizations driven around performance excellence. If you don't have performance, you don't have success. In terms of the partnership here, yeah, this is important to be able to reach a global audience. You mentioned sport before. There's a real desire in the world for people to come together around sport, and this is truly one of the fastest growing sports in the world. And so it's all very synergistic, but you don't have success without performance. You can't sacrifice it. It has to stay number one.
Well, the concentration of the sport, it's growing quickly. Apple, now a US partnership with F1. But again, there is so much institutional money coming in, whether it be Carlyle, a sponsorship, whether it be other private capital firms taking investments in the team itself. What has that money done to change this sport, Laurent?
I think as a sport, we have spent years and decades to try to have a more global reach. We have been trying to reach out to our fans. We have been trying to reach out to the businesses. And finally, it seems that we are now having that incredible growth year after year. We reach more fans, more global audience. We have now 40% of our global audience in Formula One that is female, 40% that is under 35 years old. And we also had that common points of connections with Carlyle and with Harvey. They are trying to get private markets to have that broader reach. And Formula One is also trying to get that broader reach towards a bigger fan base. And we are enjoying that period. We worked a lot to be closer to our fans, and you are right. There is so much more coming. We feel we are only at the beginning, especially in the US, in terms of reaching out to the wider audience.
It's a fair point. This growth is happening to both of your industries at the same time. Harvey, that growth also coincides with you taking over the leadership of Carlyle in early 2023. It does feel like a different mindset coming from institutions coming to you to buy funds versus you now having to sell them as well to a broader audience. Is this a big cultural shift you think that you're leading at Carlyle? Is this a Carlyle 2.0?
Well, I think, again, if you think about it's an incredibly competitive world out there. All organizations have to go through constant processes of self-analytics, really being humble, asking themselves, hey, what can we do better tomorrow? What can we do better for any client we serve around the world, whether it's a wealthy individual outside the United States or a future retirement, an individual planning for retirement in the United States when all those rules change. And so, no, I don't know if you're ever through your 2.0s. I think as a leader of any organization, you constantly have to be working with your teams to say, hey, on any given day, what can we learn? What can we do better? And who can we serve better? And so again, I don't view that any of that as revolutionary. I just think of that as evolutionary. Now the firm, as you point out, has been on a strong growth trajectory since I've shown up. The team's really rallied. They've done an extraordinary job. I'm really quite proud of everything they've done.
Is it a cultural shift, though, to go from institutions to have to think about retail and wealth?
I wouldn't say it's a cultural shift because at the core of everything that is culturally relevant is performance. What I would say is understanding that end client. So you see a lot in the news today about retirement. It's not really even a sensible question to me whether retirees in the United States should have access to private markets. Firefighters, millions of them. Teachers, millions of them have had access to these solutions through their pension plans. What is relevant is how do you structure them? How do you work with regulators to get it correct? So the real issue about extending private markets more broadly around the world to different clients is just getting it right. Mm-hmm. But it makes total sense. Since 2000, we've lost half the public companies in the world. So private markets are the market that people want to allocate capital to, and they shouldn't be denied that opportunity. We just as an industry have to be really thoughtful about how we deliver it.
Right. Well, you coming in as leader, maybe there are some things that also mirror each other. Coming in when there's some tumult at the top, when there's maybe questions of leadership. Laurent, you've had to do that this year as well. Has Harvey given you any advice of what it's like to come in as leader when there are questions surrounding past leadership?
Of course it did. Of course, absolutely. And it even goes beyond. When we say why do we partner with Carlyle? We partner with with companies so that we can have that challenge, we can have that exchange about leaderships, about culture.
Well, we have to know what the advice
people.
was. We need to see behind the scenes.
You know, the behind the scene advice was as simple as that. You know, it's all about performance, and performance only comes from people. So get your people in the right conditions to work, give them the possibility to express their talents, make sure they have the right working environment for them to operate at best. That's what they do. That's what we do. That was one of his first advice.
Yeah.
And all of that is happening in an incredibly technological environment and data-driven environment.
To be fair, you were also coming from Racing Bulls, where you were having a lot of success with the team, even outperforming the parent team at certain points too. Was it a hard decision to make to come over to Red Bull, or was it even a choice at all?
I think it was an incredible honor, to receive that call. The first feeling you get is it is Red Bull asking you to step up there. There is a sense of loyalty towards the company. So of course it was a big news and a big surprise. But it's also something that you have to jump into as part of the loyalty you have with the group. And it's an incredible honor and privilege to be part of a team that has been winning so much in such a competitive environment in the last 2 decades.
As leaders, we can all learn from each other. What he just talked about was really about talent, and talent drives everything. We're in a people business. No matter how much data we collect, no matter how much technology we implement, we're in a data business. He didn't want to get into too much detail. He has called me about tire selection, and I did call him for advice during the government shutdown. I said, hey, should we brainstorm about these issues? But anyway, that's really just between him and me as leaders.
So for the sprint, you were hard, soft, medium. You were there every call.
He doesn't call me live. We usually talk a couple days before a race, and then I'll talk to him like leading up to the government shutdown. But once it happens, I'm doing my thing. He's doing his.
Well, maybe you're the right person for this, Harvey, because I was really struck by something you said last week at a conference. You called yourself, as part of being the top of Carlyle, also the chief worry officer.
Sure.
What is your chief worry right now as the chief worry officer?
Well, the important thing about being the chief worry officer is there's no list of things that one doesn't worry about. But I think that, part of my role, and primarily really what drives my role, is exactly what Laurent just said about enabling the team, motivating the team, bringing the team together, ensuring that the team feels good about success, but not too good, always staying hungry, but at the same time humble. They've had really remarkable success since he stepped in. I mean, it is extraordinary with this man, leader, and friend, and the whole team and Max have achieved. Like, it's really needs to be underscored. I think in terms of worries, the key things about worrying is anticipating things that may happen, but allowing your teams to really digest that information. So at this particular point in time, as we sit here, there's a lot of people talking about markets being priced for perfection, or geopolitics, or basically the way governments are relating, and trends that have existed for 30, 40, 50 years that are somewhat reversing. I would put all these things sort of on my list of things I focus on, but there's nothing as I sit here this morning that I'm worried about.
Two very, very happy gentlemen today. That was Carlyle's CEO, Harvey Schwartz, and the team principal of Oracle Red Bull Racing, speaking with Bloomberg on the sidelines of the Formula One US Grand Prix in Austin. Coming up, CPI data due Friday as the government shutdown heads into week 4. We'll discuss that data next. This is Bloomberg Open Interest. Now look, what's ahead for markets this week. Today, President Trump hosts Australia's Prime Minister at the White House. And then Tuesday brings earnings from GM and Netflix, among others. On Wednesday, tech results will pick up with Tesla and IBM reporting. Plus, we also have Southwest Airlines earnings. On Thursday, American Airlines, also Ford and Intel. And finally, on Friday, US CPI data. But with all of that coming out this week, I'm not sure what the market will be most excited about, but it certainly will be excited about that inflation data. And for more, we're joined now by Anna Wong, Chief US Economist at Bloomberg Economics. Anna, will the data show any deterioration for not having been collected when it maybe originally was supposed to have been?
So this CPI report covers September, and I think it will be okay because basically before the shutdown, the BLS already have all the data they need.
So what is it going to show us, Anna? You've been right so many times in the last several months about what the Fed's going to do, about what the data is going to show us.
Yes, I think this report basically will green light for the FOMC to cut by another 25 basis point next week. We're looking to see some slowdown in tariff pass-through in categories like sports equipment and certain apparels, whereas there's still some pass-through from tariffs on certain household appliances and toys. But all in all, I think it will be a pretty good report, and it would suggest that hotels and airfares are actually in deflationary mode, which will continue to exert a disinflationary impulse on the CPI.
What about services, Anna? We had started to get worried about services inflation. Will we see any kind of relief there?
Yeah, so we had actually 2 months of rebound in services inflation, but this is the one where I think it will show hotels and airfares falling again, which from a economic standpoint might not be such a good news because it suggests that there may be a renewed downturn in employment, because usually when people feel good about the economy, they travel. And when these prices are down, it generally says that they're not doing too well.
So a double-edged sword on that particular metric. Anna, is there any outcome that could cause the Fed to maybe think a little longer about cutting next week, or at least, the week after next?
Yeah, we'll need to see some strong evidence of a pickup in tariff pass-through. And recall, Vonnie, that there was a PPI back in mid-August that was very high, surprisingly high, and the market immediately tanked in response to that. So I think it's not just a headline CPI that market participants are looking at, but the story in it and whether the categories that are experiencing high tariffs are passing through prices faster.
Anna, relatedly, perhaps, why are treasuries bid today? I mean, normally, if stocks are higher, I wouldn't really be asking you that question because we've been seeing that kind of pattern over the last several weeks. But plenty of risk on today. Is there a safety haven trade as well?
Yeah, we are seeing a lot of contradictions in economic data and markets. So, even as the unemployment rate was rising, the stocks were grinding higher and bonds were going lower and gold were going higher. And I think the rally in bond market suggests some jittery and fears about not knowing what is really beneath the surface in the credit market. And the two regional banks' balance sheet problem last week really, basically is a wake-up call for many investors, and it serves as a check to this risk-on sentiment.
You have to wonder if by then the Fed chair will be asked about those problems. I'm sure he will, no doubt. Anna, thank you so much. That is Anna Wong of Bloomberg Economics as we look ahead to that CPI data. Well, let's get a check on markets now. We're about an hour and 25 minutes into the trading session, the Monday trading session, and it is not a disappointment if you're long equities. The S&P 500 up 1.1% now, close to session highs, with the Nasdaq 100 up 1.4%. Just for some context, the Philly Semi-Index, there's literally only 2 stocks that are lower in that index. And Apple, it's also hitting records today. It hit a record just a little earlier on. It's vying now with Microsoft as number 2 most valuable stock. Coming up tomorrow, Nimrit Kang of North Star Asset Management, David Harrow of Harris Associates, and Blue Owl co-CEO Mark Lipschultz. This is Bloomberg Open Interest.